I'm Larry Ray, President and CEO of American Manganese Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Chris Vermeulen. His website is thegoldandOilGuy.com. Welcome to the show, Chris.
Hey, thanks for having me, Jim.
On the equity markets, what does it look like right now? A lot of zigzagging, I think.
It has been, yeah. We've seen the market in the last couple of weeks here. We saw the equities market in October had a massive rally, and a couple of weeks ago we saw the equities, the S&P 500 and the broad market in general take a nosedive. And we've seen a pretty sharp decline, and it came all the way down to a support zone. It's had a nice bounce up over the last 7 days. And today we started to see it's more of this kind of volatility where we saw the equities markets were down about 1% in pre-market trading this morning. They ended up opening up a little bit higher, so the majority of investors didn't really see the amount of selling, heavy volume selling and overnight trading last night. And the market always has a way of kind of disguising some of that price action. So the market didn't really gap down as far as most people, they don't see the damage that was kind of done in overnight trading. And this morning, the equities gapping down, we're seeing investors kind of pile back in here. They're buying back up, probably in hopes of the Thanksgiving rally, kind of creating the Thanksgiving rally. But we've had a big gap down this morning, and that was below a critical support level, heavy volume selling. And I think all this is kind of a knee-jerk reaction of investors trying to buy on the dip. And I don't think the buy on the dip is really going to work going forward. This is going to be a very short-lived, I think, little rally here. Might last a couple days and kind of top out here early next week and continue to go sharply lower. And you can kind of see that if you look at the way bonds have been moving. We're seeing money rotate into technology stocks like the NASDAQ, the XLK ETF, which is the technology sector ETF. And we're also seeing money pile into the big brand name stocks. So the S&P 500 type stocks. And those are the type of plays that the average investor like to more or less invest in because they like to play the leading stocks because they're the ones in the headline. So they drive those prices up. And of course, they also put money into their mutual funds and keep adding to investments. And of course, most mutual funds hold all those top 500 companies. So the average Joe is piling into the stock market up here, which I think we're in a major topping phase in the stock market. And they're pulling their money out of short-term bonds. You can see the short-term bonds price just continues to fall. And that's usually what happens right at a key turning point. We're seeing stocks trading right where I think we're at critical resistance where they're going to top out, yet the average investor is buying stocks and selling their bonds. I think it's the exact opposite of what they should be doing. So it's going to be really interesting over the next couple of days here with today's big, heavy volume gap to the downside. I think we're going to see continued selling step in over the next week or so, and we're going to see sharply lower prices.
The U.S. dollar is still climbing, and the Canadian dollar, of course, is having trouble keeping traction.
Yeah, the U.S. dollar, a couple weeks ago when we spoke, the U.S. dollar had already started to make its way higher. And right now it's trading a little bit higher than it was before. It's trading at a major turning point here. If the U.S. dollar can break out to the upside and have a little bit more of a move up, then we're going to see a huge breakout, and we're going to see the U.S. dollar take off. And we could see another 8 or 10 cents added to the U.S. dollar really quickly. And of course, that I think is going to put a lot of pressure on commodities. We're going to see crude oil continue to move down, which will kill the Canadian dollar. We'll see the exchange will just, we can see $1.40 exchange for the Canadian dollar, which I don't think a lot of people are expecting to see, but really we're not that far away. We're potentially only a week or two away from seeing an extreme exchange like that. And of course, gold and silver, with the rising dollar here, we're going to see most likely a big breakdown in gold and silver that could happen any day. But overall, for the precious metals market, I think we're within about a 90-day window here where we're going to start to see gold and silver and gold miners find a bottom. But the key here is the biggest moves, percentage-wise, usually happen right at the end of a trend or a cycle. So we're getting close to the end of this bear market in commodities, in precious metals specifically. And I think we're going to see a big drop here that's going to flush the market out just before it bottoms. So we talked about this kind of last time, that you need to keep some gunpowder dry and get ready for a big drop. We're talking, 8 to 15% drop, potentially even more, maybe even 20 or 25% drop in gold and silver still from here. So,
is there any seasonality to gold and silver?
Gold tends to perform, gold tends to perform pretty well right now. And, it's really tough with seasonality. There's a lot of different seasonality charts, and they are all kind of base how they kind of put those calculations together differently. And it depends what site you go to. Some of them are almost flipped to each other. But overall, I find gold tends to be fairly strong kind of going into this time of year. And it usually trades more stable, not so volatile. And overall, gold the last couple of days has been kind of trying to put in this bottom. It's been chopping around, pretty volatile, and I think we're going to see some upward momentum in gold. I think we're going to see a little bit of a move up probably for a week or two, but then I think we're going to see it have another leg to the downside, and we're going to start to see that big washout low take place.
Who's behind a big sell-off like that? Would China be trying to drive down prices so they can buy even more gold?
Yeah, they could be. You know what? Who really knows what the manipulation? Who's really doing it for the gold market? But overall, there's just an overall downward bias on gold, and whoever is manipulating it, or if there is any real manipulation, there's just continued down pressure on gold. So, we're just not seeing any real life. When we do see big moves to the upside in gold, you can really feel it's like it's kind of a crowd of people just piling in, and they get all excited about it. And then as soon as that little wave kind of just volume dries up, the price just drops. It just completely free falls again. There's just no real support. All it is kind of just waves of excitement, and then the selling pressure just comes right back in and keeps pushing it down. So overall, it would make sense that a lot of, China would want to be driving it down and keeping price down so they can load up on as much as they want. Obviously, that's going to be, I think, a great play in the long run, and which is why I like gold and silver in the long run. I just don't think we're at the bottom yet.
If you're buying gold with Canadian dollars because it's priced in American, aren't you really just buying American dollars?
Yeah, pretty much. The whole exchange for gold miners really is worked out really well for Canadian gold miners, simply because Canadians are still getting the same dollar with the exchange rate, are still making, $1,200-$1,300 an ounce with the exchange easily on their money. So this exchange is great for miners, and buying gold is almost, at this point, it's kind of like buying the U.S. dollar. But in the long run, I think gold is going to outpace the U.S. dollar. I think the U.S. dollar is going to top out in 2016, and we're going to see a substantial correction. Usually what goes straight up kind of comes straight back down. And if you were to look at the monthly chart of the U.S. dollar index, it's on fire, and it's set to go a lot higher still. But once this big spike stalls out and rolls over, maybe mid or late 2016, I think we'll see this huge collapse in the dollar, and we're going to see money start to spread elsewhere. But right now, I think the dollar has kind of become the safe haven for investors, international investors around the world. I think a lot of people are concerned about various currencies, and people are just kind of moving to the dollar. They want to hold the greenback, and because the greenback is rising, it's helping, I think, lift the stock market. We're seeing investors want to move into U.S. Equities, because not only do they have potential of the equities going up in value, but the dollar is rising also. So until that dollar really tops out here, we're going to see a lot of pressure on commodities, and I think we're going to continue to see a little bit of an upward bias. We're going to see the equities market kind of hold up and trade along sideways in this pattern, but we're very close to a big breakdown.
I see the U.S. dollar is pretty close to reaching parity with the euro. Will it?
It could. I really don't know if it will or not, but it's not too far away, and if it does, it's going to be pretty interesting to see how that's going to affect the travel. And unfortunately, what's happened overseas with Paris, all these things I think really play into the overall health of each country. And this whole traveling issue and the bombing and all this stuff is going to cause a very big hiccup. I don't think we're going to see the effects of really what's happened on earnings basis and how it's going to affect the country and currencies for probably till the end of the first quarter. So, this whole currency kind of fight or battle for who's can undervalue their currency is going to continue to drag out here.
We'll have more with Chris Vermeulen right after the break.
I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
More and more people are looking to the internet for intelligent, riveting, and thought-provoking interviews. To advertise on The Goddard Report and TalkDigitalNetwork.com, call 604-699-8600, 604-699-8600.
Welcome back. We're speaking with Chris Vermeulen. Chris, just before the break, you were talking about this battle. How low can you drive your currency? Could the U.S. decide to bring down their currency early, or are they just going to let it ride out naturally?
I'm not sure. I'm not exactly sure how they would go about bringing their currency down. If they're going to start raising rates, if we do see a rate increase in December, which, the economics is kind of pointing to that they should do it, but it's such a fine line. There's so many reasons why they shouldn't raise rates. It's this huge battle. And if they start raising rates, though, in December, we're probably going to see the U.S. dollar break out to the upside here and start a big run. And I think it's going to be hard for them to devalue the dollar. It's going to take, they might start up a new type of quantitative easing and start printing off a lot more money and not move rates, and that could cause a big issue. But it really is going to be interesting to see what happens in December if they raise rates or not. But the earnings that we've had in November were really good, and of course that is having everybody feel as though they might be raising rates. But if they do start to raise rates, I think that will probably be the top in the stock market. I think that will trigger a big wave of selling, and I think we'll just start to see a major bear market really start to take place.
Can they afford to raise rates if that's what's going to happen? Or is it a matter of ego where the Fed says, well, we told you we were going to do it, and so we're going to do it, but really we don't know why?
Yeah, I know. That's kind of how it is. It's can they afford to raise rates? No. Do they probably want to because they said they would, and if they raise it, they maybe make everyone else think that the country is actually doing well. Like they might, there's all these different angles you could look at it. Either way, it's a huge mess. There is no right decision at this point. They've already kind of jumped off the deep end and they're treading water barely. It doesn't matter what they do. I think everything is going to crumble in the end. But of course, they're going to try and drag it out as long as they can. And I wouldn't be surprised if they raise rates in December and try to make everybody feel as though the economy's coming back. We can start raising rates, and it will have an effect on the housing market. I think if they start to raise rates, we'll see some downward pressure, and it's going to increase kind of the cost for people. So it's going to be really tough on the economy if they raise rates, but they might do it to try and make everyone think that the economy is better than it is. So it's a big tangled web. What is the right thing to do? Who knows?
Well, U.S. housing sales were stronger than expected. Is that one of the reasons why people want to get a lower rate now?
Yeah, well, the low rate, it's, you speak to investors who have been investing for 10, 20, 30 years, and they all say the same thing. I've been looking at various real estate investments myself, and whenever you go and you talk to some of these guys who have been doing it for years and are more or less retired now, but still own a lot of property, they all kind of say the same thing. They're like, lock in a rate for 10 years. This is pretty much free money. And, they're like, you can sleep stress-free for 10 years knowing you can make your payments. And these low rates is incredible in the housing market. It's really sent real estate prices through the roof. It's held it up very well. But eventually, in 2 or 3 years, when rates probably start to rise or continue to rise, it's going to really, pop this real estate bubble, and we're going to start to see some pretty big damage. A lot of people are struggling to make payments because you know how it is. When you go to buy a house, you buy right to your limit that you can just afford now at the current rate. But if rate goes up, if interest rates go up just 1%, it makes a big difference on a $500,000-$600,000 property. And unfortunately, I don't believe the economy is nearly as strong as it is. Businesses aren't making nearly as much as they used to, even though the earnings per share, our numbers are way through the roof. The record number of buybacks, are totally masked what's really going on. I know a lot of people who are unemployed, struggling to find any work. If there is any work, it's just above minimum wage. It's just a struggle. So this whole economy here is just kind of drifting, and I think the Fed and everyone's just hoping things are going to pick up and uptick, but I just don't see any real momentum behind anything. Everything seems to be people just cutting costs, trying to save money and make everything look good, but people are all struggling. Doesn't matter what you're doing. I think business is down in general.
Is that why Christmas has started so much earlier? I'm looking at the ads on TV, radio stations playing Christmas music, and it's still more than a month to Christmas.
Yeah, it's to me overall businesses seem like they're extremely slow. Every time I talk to someone, everybody says kind of the same thing. Yeah, it's been a slow year, and things just seem really quiet. And I'm not feeling like a lot of people are going out and buying extravagant things and spending lots of money. It feels as though everyone is spending more quality time with family and friends and doing, smaller gifts. It just feels like everything is contracted. And I think businesses are trying to find a way to sell stuff, and things just aren't moving. And you can see this in the Baltic Dry Index, the transportation stocks. Everything is down. The product is just not moving. New product is not getting ordered to stores. It's a real struggle. So I think stores are trying to, put whatever next season is coming up. They throw it on the shelves, and they're trying to move product because they're just having troubles selling stuff.
And will Black Friday really be all that big a deal with people putting in huge discounts now?
Well, Black Friday, I've never really found Black Friday to be a big day in Canada, but in the States, it's pretty much the day. It's kind of, this year it happens to be right after Thanksgiving, which is a little different than normal. Usually it's the Friday before, but I feel as though sales, everything is going to be a lot weaker. When we see the earnings, I think, for the last quarter, I think that could be the top in the stock market, which is kind of what you and I have been talking about for a while here, is January, February, I think, is when we're probably going to see the equities market top out right after this kind of holiday bulge.
There's one group of people who are wishing for a cold winter, and that's natural gas producers.
Yeah, natural gas has been beaten up extremely hard. Pretty much September all the way through right till today, we've seen natural gas prices take a huge nosedive. And there's been a lot of talk over the last month and a half that this winter is going to be one of the warmest winters in a long time. And I think that's been priced or is getting priced into natural gas. Natural gas has fallen from $2.70 all the way down to, it dipped under $2 a few weeks ago. So we're seeing massive selling in natural gas, But again, if we get one big cold snowstorm, through United States, we're going to probably see something very similar to what we saw. We saw it happen a couple times last year. The biggest one was right at the beginning there in January, February of 2014. We saw natural gas jump 65% within a few weeks. And I think we could see that again, where natural gas is so low here and has been really flushed to the downside with, I think, the talks of this warm winter, that once the cold kicks in and if we can get a 1 month kind of bout of cold, we're going to see natural gas, I think, jump through the roof.
Well, for local ski mountains in BC, winter came early, and perhaps if there is a cold snap, they can keep the snow they got.
Yeah, this is great for the ski resorts. I'm in a little ski town here also, and they're talking about having the ski resorts up and running in about a week and a half. They've got new equipment where they can blow snow at +3. I wouldn't really call that snow. I know when they used to blow snow at -3, it used to stick to your mask like glue. I don't know what they're spraying that freezes at +3, but it's going to be interesting. But the ski resorts, my town is really based around a ski resort, so the talks and the excitement, and it employs a huge chunk of our town. So it's really exciting to see things pick up a month earlier than normal potentially here.
And I'm thinking too, with a low Canadian dollar, more people will be spending their winter vacations in Canada.
Yeah, for sure. I no doubt about it. Last year we had a lot actually of international skiers here, and I know there's already some big marketing campaigns going on for our ski resort, because I'm at a ski resort here that is also out west. It does Whistler, Blackcomb. So it's a major resort. So it's definitely pulling from international, and when you go up there on the weekends and you walk around the village, a lot of them are from the States. It's such a cheap holiday. Why not go to Canada? It's safe, it's happy, we got good beer, and it's cheap.
That's a good slogan for Canada. Safe, happy, and good beer.
Yeah.
Chris, thank you very much for chatting with us.
Hey, thanks for having me, Jim. Always a pleasure.
My guest has been Chris Vermeulen. His website is thegoldandoilguy.com. You're listening to HowStreet.com Radio. Our popular YouTube channel is Talk Digital Network. Find us on Twitter at Talk Digital Net. Comments or questions for the show can be sent to info@HowStreet.com. I'm Jim Goddard.
Comments made on HowStreet.com Radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com Radio is a production of HowStreet Media Incorporated.